Millions of Americans have just had their credit card limits cut. But why is it happening now? Is this just the first sign that the United States is about to enter into a recession? Well, look at this. It says credit scores drop at fastest pace since the Great Recession. That is scary. When we are seeing credit scores drop. But why are credit scores dropping? Why are credit limits getting reduced? Why are the American people getting squeezed? That's the big question, and we're going to answer it in today's video. So if you have any questions regarding credit scores or your specific financial situation, please ask your questions down in the comment section below. But look at this. It says student loan delinquencies hits nearly 6 million Americans. 6 million Americans are now delinquent on their student loans. And this is going to trigger a massive financial crisis. I want to show you some things, okay? I really want to show you some things that are happening right now because we are seeing credit card usage in the United States has been exploding. Everybody's using a credit card to pay for meals, to pay for food at a grocery store, pay for utility bills, their cell phone bill, their Netflix account. Some people, and I hate to say it, but a lot of people have been writing in and saying they had to use credit cards and take out cash to pay their mortgage, to pay their rent. They're now paying their rent and mortgage using a credit card. That is disastrous. I can tell you that from personal experience. Okay? I've had a lot of friends do this exact same thing during the pandemic, during the early stage of the pandemic. And it was a huge, huge problem. I want to show you something. I'll play a clip for you. Because a lot of people think, no, credit card companies, they are not cutting anyone's limit. They are. They're doing it as we speak. Look at this, though.
So has Amex cut your credit line on either your business credit cards or your personal credit cards lately? Or have they sent you an email saying they're reviewing your credit and they'd like you to pay X amount within 3 days? Otherwise, they're going to automatically lower your credit line.
I can tell you right now, I have had people write to me and say that that is what they're telling them. That if they do not put down a certain amount of money, pay down their balance, then they are going to close their account. Not reduce it, they are going to close it. But why are credit card companies doing this? Well, that's the big question. And that's what we need to get to the bottom of. Here's one of the reasons why. They're trying to manage risk. Okay? Manage risk, that's it. And if they can manage risk, if the United States, and there's a good chance the United States dips into a recession, if we do, these credit card companies should still be able to operate. So they're just trying to manage risk to ensure that they don't go bankrupt. But here's the second reason, and this should scare you. Your behavior, what you purchase, is now being looked at. Let me read something to you. Are you heavily buying essentials on credit? That's what somebody wrote to me. I'm not going to say which credit card company they work with, okay? But they simply asked, are you heavily buying essentials on credit? What does this mean? Well, throughout our conversation, I'm not going to read you the exact conversation because there are some things in here that shouldn't be out there yet. But simply what he's saying is that if you are using your credit card to buy or to pay for things like you're paying for utility bills, okay, your electricity, your water, your sewer, your garbage, right, gas, fuel. If you are using your credit card to pay for a lot of meals, okay, eating out a lot, okay, again, these are essentials. But then, if you try to use your credit card for your insurance, for like auto insurance, You try to pay medical bills. What these credit card companies are now looking at is your consumer behavior. If they think you are at high risk because you're spending a lot of money on what they deem essentials, you could see your credit card limit get slashed. They will actually reduce it. But here's the interesting thing. Here's what's happening at this time. We are seeing more and more people spending on credit because that's the only way that they can buy things. But as they are spending on credit and paying it down, what happens, and I've seen this happen before, a friend of mine, he opened up an American Express card. Okay, got a new American Express card. I think they gave him like a $10,000, $15,000 limit, whatever it was. That was his limit. Well, he racked up a decent amount of debt. I think it was like $5,000, $6,000. Then he paid it down, all the way down. Then he racked it up again, about $8,000, $10,000, something like that. Paid it down, all the way down. Then it went all the way up, okay? And he pretty much maxed it out. But he didn't pay it all the way down. What he did was he paid like $5,000. Well, guess what American Express did? It's like, okay, you're at $8,000 or $7,000 in credit card debt. We're going to take your limit. Instead of the original 15, we're going to go down to like 8 to 10. Then he paid it down a little bit more to give himself some room. Got it down to like 3 or 4,000. Brought it down. Well, guess what happened? The credit card limit came down to 5. Okay. Then it went. He paid it down to a little bit more, and guess what? His credit card limit was stuck, and still is, at $2,500. $2,500 for an American Express card. Yeah, it's interesting. But again, this is what we are dealing with at this time. And if you've had your credit card limit reduced for whatever reason, let me know down in the comment section. Look at this right here. This is an article from February. It says Americans' credit card debt reaches new record high. That was at $1.21 trillion. That was in February. Guess what we're sitting at today? $1.3 trillion in debt. Credit card debt. $1.3 trillion in credit card debt. Okay? That means we've added almost $100 billion in credit card debt since February. That's not even a full year. So right now what we're seeing is more and more people are putting money on their credit card or putting expenses on their credit cards simply because they have no other option. But look at this right here. It says younger Americans exposed to the double whammy of high student debt and low entry level hiring. They're under even more financial pressure. Okay, but look at this. It's mounting stress. It says the average credit scores fell sharply after the 2008 financial crisis as unemployment skyrocketed and millions of Americans could not make their mortgage payments and defaulted on their auto loans. Guess what's happening at this time? We are seeing more and more Americans are losing their jobs and cannot afford their mortgage payments, can't afford their auto loans, can't afford their credit cards, can't afford student loan debt, can't afford medical debt, and the list goes on and on. But the good news, okay, mortgage delinquencies are actually at an all-time low. They're not at an all-time high. But look at this. It says right here, but FICO found that delinquency rates on auto loans, credit cards, and personal loans are at or near their highest levels since 2009. These delinquency rates are more consistent with an economy in recession than one still in expansion. All right. So the good news is home equity loan delinquencies, those rates are still near historic lows. But what about personal loans, auto loans, credit card debt? That is near the highest level since 2009. That right there should be concerning. If that doesn't scare you, I don't know what will. Because for me personally, when the American people don't have cash, okay, and this is huge. If you don't have cash to spend, what do? You go and put it on credit. But if your credit card debt is already maxed out, you have no other options. No other options. This is where when we see, not if, when we see additional layoffs and when we see all those government employees who are still getting paid, mind you, come October 1st, they will no longer be getting any payments from the federal government, and they will not be getting any of their benefits. Their deferred resignation will be official on October 1st. Guess what that means? Hundreds of thousands of employees, hundreds of thousands of Americans will now be struggling to pay their bills. All right? So I will leave you with that, but understand at this time that credit card companies are trying to minimize their risk. That's the reason why they are reducing your credit lines as we speak. So hopefully this gave you a little bit of an insight as to what credit card companies are doing and how this is going to impact you in the very near future. But again, if you have additional questions, ask them down in the comment section below. But again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.